Hello, everybody. Welcome to this Protection Insight podcast. Joining me today is a good friend of mine, Carl Hurd from LV, and Carl is the National Account Manager over there. So welcome to the podcast, Carl. How are you today?
So I'm very good, thank you. And thanks for having me on this today.
Excellent. And what we're going to talk about today, Carl, is your mortgage and rent cover. So I think most advisors appreciate that LV are kind of market leaders in the income protection space. But what was you thinking, Carl, in coming up with a new income protection product? Why does the market need something different?
Yeah, it's an interesting one, isn't it? Because that income protection family, it's an area we focus on, is income protection alongside all our other products. I guess there are a lot of advisors thinking, well, why do we want something new in that space? And it's an interesting one when we talk about income protection. What we've done is we've created a product that's in the income protection family, but it isn't necessarily protecting income. And that's why we felt there's a bit of innovation, because talking to different advisors out there and finding maybe some of the issues they were having when they were trying to protect people's income, we were finding that there were some clients out there that were struggling perhaps with your traditional income protection models, but were still very aware that they need some sort of protection if they're off work for a short term through an illness, etc., especially for that roof over their head, their mortgage or their rent maybe.
Yeah, and you've identified typical kind of client groups, I suppose, who might traditionally found it a bit challenging to get income protection. So what would you say is the target market really for this type of product?
If we think back, actually, it was growing before the pandemic anyway, but I think especially through the pandemic, we've had more and more people becoming flexible about how they work and how they earn money. I'd love to see a stat that showed how many new Etsy accounts were created over the last 2 years, where people have been working from home maybe or furloughed and decided, actually, I've got a bit more time and I'll start up that little business I've always wanted to do. And I'm sure for everyone out there, there's probably got lots more new people locally who are baking cakes or whatever it might be that you can now buy online. So all of these little startup businesses, what they do is they generate different sources of income. And then, of course, when you look at a traditional income protection product, and we're saying, okay, so what does somebody earn? And when they come to a claim, prove they're not earning that amount of money anymore, that can be challenging when somebody's got income coming from different sources, or varies the hours they work each week. So it could be they're self-employed, they're freelance. It could be even people on the 0-hour contracts that we still have now. But very much it's aimed at that gig economy that we have as a growing thing in the UK, and people who don't earn money in a traditional way. So maybe it's coming from multiple jobs, or it's self-employed, that type of thing.
And it's, as the title says, Carl, it's mortgage and rent cover. So we're talking here about cover specifically to pay the mortgage or pay the rent.
Yeah, and so we're trying to do what it says on the tin, really. I keep trying to use the term income protection family, because actually what we're not looking to do here is we are not looking to insure the income, because maybe that income is too hard to put our finger on it, really, because it fluctuates too much. So instead, we're looking at what are people most worried about when we talk to them about what would happen if your income coming into the household stopped. And I think for all of us, it's about that roof over your head is the immediate issue, isn't it? It's how am I going to pay my mortgage? How am I going to pay my rent? So we looked at that and said, okay, well, let's find a way then that we cover that biggest asset, really, that biggest outgoing they've got each month, which is the roof over their head, without trying to drag too much into it about how do they prove their income on underwriting or on claim as well. So mortgage and rent cover, it does what it says on the tin. You are actually insuring the client's outgoing for the roof over their head, their mortgage or their rent.
Okay, so let's say that we've got a couple of clients, let's call them Mr. and Mrs. Smith, and we've arranged the mortgage for 30 years. The mortgage is, say, £200,000. It's going to run for 30 years, and these clients are both 35 right now. Their objective, Carl, as I understand this product, is simply to pay that mortgage payment. And if the mortgage payment is £500 a month, how does that work?
Yeah, so I mean, we see it as a simple product, a simple conversation to have with the client. So there may be lots of other reasons you want to talk to the client about different types of income protection. They may want more, need more, and it all depends on their circumstances about what their income is coming in and everything else. But if we take Mr. and Mrs. Smith, through that advisor conversation, the fact finding and everything else with Mr. and Mrs. Smith, you've appreciated that actually their income comes from lots of different sources, but a real worry for them is, I just want to make sure that mortgage is covered, that £500 a month is covered. So what we're asking advisors to do is the client needs to be working. Okay, so that is the only criteria when it comes to the financial underwriting side of things for the client. We ask that they're working, but we don't ask that they're working minimum hours, and we don't ask for them to prove what they earn. And that's the important bit there. Instead, what we ask is that they prove that they are responsible for that outgoing each month that keeps the roof over their head, which could be rent, or in this circumstance, say Mr. and Mrs. Smith, we're looking for the advisor to get proof that they have a mortgage of £500 a month going out. So mortgage offer, mortgage statement.
Can you do that using a bank statement, Carl?
Bank statement is an interesting one because what we ask for is mortgage offer, mortgage statement, if they're renting, a rental agreement. And the reason we ask for those is because we want to make sure they're the named individual so that they are responsible for that outgoing. I think the word here all the way through, and I'll use it multiple times because it's why we've created the product, is we've created it to have a simplified process. So the slight issue you get with the bank statement is, and it's historically you probably wouldn't get it so much now, but you might, which is what we don't want is we don't want Mr. and Mrs. Smith to have a joint bank account where perhaps because of when they met and whatever else happened in their lifetime, Mr. Smith has the mortgage, so his name is on the mortgage, but the payment comes out of their joint account. And then you're looking to insure Mrs. Smith. Because the problem you've got there is Mrs. Smith isn't actually responsible for the mortgage because her name's not on it. So the bank statement, unfortunately for that, doesn't give you the truer picture. So we're looking for named individuals on a mortgage, named individuals on a rental agreement.
Okay. And I think advisors watching the podcast might be wondering, you mentioned financial underwriting. What about medical underwriting? What's the situation there, Carl?
That'd be nice, wouldn't it? That would be nice, wouldn't it? And when I say simplified, I can't get it that good. Okay, so we do need to have medical underwriting. So it's a protection product. It's a long-term product. So when we talk about Mr. and Mrs. Smith, we've talked about a 30-year mortgage, 30-year term. So actually it has normal medical underwriting as you go through. The bit that we're taking out the loop is the financial underwriting bit because we are perhaps talking to clients who are going to struggle to prove their income. But the medical bit still applies. It's still a fully fledged protection product, so we're still going to do the upfront medical underwriting.
Okay. Now, I think some advisors watching this might well be aware, but LV were the first to the protection market with a protection risk calculator a good few years ago. And if we look at our case study here, Carl, the Mr. and Mrs. Smith, we know that we can get them both covered because they're both on the mortgage, and they're 35, 36 next birthday, and they've taken out a 30-year mortgage, so they'd actually need cover up until age 65. We can see here that actually the risk of them being unable to work for 2 months or more is actually 57%. And that obviously, this is part of that income protection family. So I've just done some quotes on Solution Builder. We can basically get cover to pay the mortgage for a year or for 2 years. Now, if we look at Mr. Smith, and if we look at a 2-month deferred period, we'd be talking there about £8.24 a month for cover that would pay for a year, or it would pay the mortgage for 2 years for £9.66. If we look at Mrs. Smith and we look at actually 1 month deferred period, again, the figure's a little bit lower, £8.09 to £8.77. I think it's really interesting, Carl, that if you look at that same type of mortgage situation, a 30-year mortgage, £200,000 up to sort of retirement age, I'm getting about £34 a month, Carl. So it's quite affordable, isn't it?
It is, and as you said at the start, you and I have known each other far too long, really, isn't it? It shows how long we've been around in this industry. But we've talked a lot over the years about risk calculators and what good they do when you're actually having a conversation with a client, because it really does illustrate what you are talking about in protection and about how important it is. And obviously, I'm going to be a huge advocate of our risk tool, and I actually worked on creating that many, many, many years ago, which I think we've joked before. We sneakily maybe stole the idea from a Canadian life insurance company that had it. We just took out the insurance bit about if they were hit by a moose or whatever it was. But when we brought that product out, to that risk tool out, and we've stuck to it all the way through, I think it is such an important conversation to have with the client, because actually when your client sits down, they're going to be worried about dying. That's the primary thought, isn't it? And I bet you actually for Mr. and Mrs. Smith, it's probably in the teen percentage of the chance that they're actually going to die over that term, when actually, as you say, their chances of being off work for 2 months or more is 57%. So the risk is so much higher that they're going to need, in our world, as we talk about, an income protection plan. Now, traditionally, and I guess, historically on price, and maybe a little bit more because it still sits in our heads, because remember, the client doesn't have a figure when they come in to sit in front of you as an advisor. We assume the income protection is always going to be a lot more expensive than the life insurance then, because you're talking about a teen percentage, whatever it might be, on the life insurance, but actually a 57% chance that they're going to need the income protection. So the risk is higher, the odds are higher, which means theoretically the premium's higher. Go back to what I said about this product. We identify there as a gap. They need that 57% risk covered, but they've come and sat down in front of you thinking about life insurance prices, perhaps, if they did know what that was going to cost. So what we've tried to do is we've tried to create a product that is simple, keep saying that one, but also really affordable. So when you're talking to the client about that whole portfolio of products they need, and actually that 57% risk you just talked about, Mr. and Mrs. Smith, that for those figures you just quoted there, it is as cheap as we can get it, as affordable as we can get it, that they have a level of cover. So yeah, affordability, simplified it. That's what we're trying to get to, so that it makes it easier for the advisor to have that conversation with the client.
Yeah, fantastic. And I think I've got one more question about added value. It seems everyone's doing added value benefit services these days. Do you get any with the mortgage and rent cover, Carl?
So it is a protection product. It sits within our protection full suite of products. So it's part of our menu plan as well. So you can bundle it up with other things. With all of those products, they come with two things actually. They come with LV's member benefits, which is very historic with ourselves, and that gives the client things like free legal helpline. But it also comes with doctor services that we've had for quite a period now. And doctor services is the juicy one, I think, really, which is the client gets access to private GP service they can use a couple of times a year, private physio they can access a couple of times a year, mental health support. The mental health support is a huge one. We've seen almost a 500% uptake in people using that actually as that added benefit over the last 2 years, which is probably a sad indictment actually of I guess where lots of us have been with the pandemic, isn't it, and locked up in our homes. But yeah, we think it's a really valuable thing to have just built in within all the products. But yeah, from the figures you quoted at £8 odd a month, that client is getting access to all of those benefits as part of the product as well.
Yeah, we'll do a separate podcast on doctor services to do it justice. But as we conclude the podcast, Carl, what would you say to advisors watching today? What are the key takeaways when it comes to mortgage and rent cover?
Okay, so we've created this for you to be able to have more conversations with more clients. So it's easier for them to understand. It's an easier conversation for you to have with clients who perhaps didn't fit that traditional income model before. And as I said, please do play back with the quotes, have a look, see just how affordable it is, and hopefully then how easy it is for you to have that conversation with the clients about protecting that big percentage risk that they've got out there.
Fantastic. Okay, good. Well, thank you very much, Carl, for joining us today and talking us through mortgage and rent cover. And obviously, as we always say, thank you to you guys, the advisors, guys and girls, for tuning in and watching this podcast. So until next time, it's bye for now.
Cheers.